Hello everyone, this is Teddy Keckset from Forex Trading Unlocked, and we are here today on November 30th with a British Pound Forex analysis for November 30th through December 4th. Before we get into it, I want to pull up our disclaimer to remind you that this webinar is for illustrative and educational purposes only. This is not to encourage you to do anything, it's just to teach you. And real quick, we want to give you a plug, remind you to subscribe to our YouTube channel, Forex Trading Unlocked, if you haven't already. And also, we're going to, there's a book called High Probable Japanese Candlestick Patterns available on Amazon.com in paperback and Kindle versions. Check it out, learn how to trade those signals. It'll definitely be a boost for your trading, I would believe. So let's go to our live action screen here. We already have the forex-trading-unlocked.com website pulled up. We have our workstation page pulled up, and we already have a little stuff drawn up for you here. We're closing in on the December 31st Brexit date. Today, the US dollar bears really hammered the currencies, or the dollar today versus most currencies. There was a reversal of fortune, though, after the stock market opened 2.5 hours ago. All of a sudden, dollar bulls came out, and while most of the currencies were making new highs or lows versus the highs against the dollar, the pound did not break out to the upside, and this is a key thing to keep watch out for. This $34.03 level, if we get above here, this is a bullish breakout level, confirming momentum, and obviously the odds of seeing much higher levels in the pound versus the dollar. One thing I think that's going to contain that, though, is Brexit right here. I think we're more likely to stay contained now that we did not make a higher move high, and even if we pierced it, we'd have to close and really maintain a trade above $34.03 to sustain any bullish momentum. Now, we are looking at a kind of rejection here at resistance. But for the most part, I think you're going to see a digestive trade. We'll see how the market settles today, especially if the pound does settle lower today. I would expect to see follow through and stay within this range here. $31.04 to $34 even here. I think this is where you're going to see most of the trading for the month. The only thing that would really, I guess, change that outlook would be if we have some reason for the dollar bears to really add fuel to the fire, but I think they're kind of out of gas. Now remember, we're at month end, so maybe that might be why the dollar spiked and all of a sudden dollar bulls are coming in, where it's not really dollar bulls that are coming in, but profit taking by the big institutions and things like that. So I'd be very leery of being too much of a bull or of a bear versus the pound versus the dollar rather. But I think that right now you have a low-risk selling opportunity to take advantage of selling rallies right now. Let's check out the hourly chart. Now, we looked at some other currencies in our weekly analysis, and all of them seem to have fallen off on over the last couple hours. Now, as you can see, on a daily basis, this has been quite a volatile trade. It sold off initially, rallied, tried to make a higher move high on the day, but it failed to do so, and then it collapsed back down to where it's basically, not too far from unchanged on the day. Very neutral behavior over the past couple days of trading. That's why I believe that as we head into Brexit, especially for the pound, you're going to most likely see a very tight consolidation forming. Like I said, above $34, it's really hard. If you look at this last high here prior, we can put this horizontal line in right here. This kind of comes in right there. You see, like we spiked above it here and then fell below it, and that's when the market fell apart as far as the pound US dollar. We could be contained from this high to this low. Maybe this huge area here is going to be our range for the next few months, but I think in the short run, the next couple days into next week and into December, as we end November and start the last month of the year and the fourth quarter, it's most likely that we're going to see some bearish momentum kick up its heels. But right now, we don't have any reason to be overzealous on that, but I would say key off of the dollar index. If you see the dollar index start to really rally, if you see the euro falling apart versus the dollar, and especially if you see the Swiss falling apart versus the dollar, then most likely the pound will be in a neutral to bearish position where it will be hitting support. So right now, we're waiting for some signals. We have to see how today's trading ends, and we'll have to get back with you later on after the close, and we'll see if we have any trading signals. But while you're waiting, always go and subscribe to our YouTube channel right away, and then also go to Amazon.com, check out the book High Probable Japanese Candlestick Patterns. It's on Kindle and paperback version, or you go to our website, Forex-Trading-Unlocked.com, go to that one menu page at the top, which you can find under products, courses, and services. And as you see, when you highlight that navigation bar, it comes down in here, high probable Japanese candlestick patterns. If you click on that link, you will be able to read a short little piece from the book and get some ideas about what to expect in the readings. Obviously, the high probable Japanese candlestick patterns is pretty self-explanatory as to what the book is about, but it teaches you how to a methodology and how to actuate those trading signals, and a disciplined way of money management and trade projection techniques to maximize the benefits from those trading signals. So once again, we've got to wait for the close here for the pound US dollar. I want to thank you for your time. Always check us out at forex-trading-unlocked.com for all your Forex needs, and good luck with all your trading today and into the week.